Okay, this is going to be a review over August the 4th, 2021. So on the prior day, you kind of get the chart how I like it. There we go. So on the prior day, we had a basically sell climax and then pretty much opening reversal, two-legged pullback, strong breakout in the channel. And first thing you expect on the open is, let me actually zoom in a little. So the first thing you're going to expect is some sort of trading range. So breakout channel, breakout pullback channel. So we have a bull channel. You expect a bear breakout of the channel, which is this line, and typically the evolution into a trading range. So the trading range could start here, it could start here, or even here. Now, when you get a bar like this, it's a doji. I'm going to I'll do it like that so it's a little easier to see. So it's a doji, and the bulls want a double bottom with this low and this low, or even a double bottom with more likely this low and this low. And I'm sure we went one tick below 89.25. 89, so it's perfect double bottom. The bears want a bear breakout and more down. Most likely we'll go sideways. Now, it's a limit order market on the open, so bears probably selling above, bulls probably buying below. It's not a great buy above and stop below. And if we go much above, I think some traders may buy the close and put a stop down here and scalp out when we go above. I don't think that's a great trade because of the risk reward, but it would have worked. So we have a doji up, bear doji down. So is it a stop entry buy above? Is it a stop entry buy sell below? No. It's trading range, and traders are doing the opposite. So it's a limit order market, double bottom, micro double bottom. So here. Some bulls will buy the close, scalp out. But bulls are buying below bars here, they're selling above here, and they're buying closes here, scalping out. And when we get up there above here, they'll sell. One thing's for certain, we know we're going to get a measured move down of this range or a measured move up of this range. So two things are most likely. We're either going to test the close of yesterday or test this low. And we could do that in several ways. We could just get the range, we could go down and fail and then go up and fail and just slowly make the range bigger and bigger. Or we could get a breakout and go sideways for 12 bars here, get a breakout, and then go sideways for 12 more bars, and it would form kind of like it'd be a trending trading range day. So where's the high probability trade? Is this high probability buy? It's all swing buys. You can buy, it's a swing buy, swing sell, you can buy above. If I had to pick anything at this moment, I would buy. I think the bodies stoppage for the bulls are slightly better. What is slightly better? Maybe 5% better. It's really 50-50. So if you're buying here, 50-50 chance, you put your stop here, and you catch the low of the day. So maybe if you buy it here, put your stop down here. But it's not a great trade. So we got the bull breakout. A lot of traders move their stop probably below this bar. If it's going to be successful, we're probably going to get followed through here. So it could be a wedge. 1, 2, 3. If we get a bear bar closing when it's low, a lot of always in bulls would probably give up. And we got a doji. So what does that tell you? Well, it's trading range price action. So bear bar, these stop entries are disappointing. This one's okay. Inside bar, so it's kind of a second entry buy. So we went above here, went below the bar, inside bar. So it's second entry buy. Breakout above the moving average, but bad follow through. Probably going at least a little bit higher, but a sign it's trading range price action. And then we get a bear bar. So what happened here? Why didn't bulls buy this close? I mean, if you think about it, they bought the close and were disappointed and used this bounce to get out break even. Is that aggressive? Is that this price action? Look what happened here. Bulls bought this close and went down a tick, maybe two, straight up. Bulls bought this close. It really just kind of went sideways. So if you think about it, traders there wasn't that much profit taking. Even if there was profit taking, you had a lot of people still buying. And when I say people, I mean just computers, institution. I'm always speaking in terms of institutional volume. This is not momentum. This is momentum. So 3 consecutive bear bars. Is that the start of a trend? No. Is it the start of a small pullback trend? It could be. We could get a gap here and then bull inside bar and another breakout and just keep going up. This is basically a small pullback trend. It doesn't look like it. It's close. Now, this gap closed. This gap stayed open. A small pullback trend is just tight trading range. So if I do anything, would I be, what would I do? Would I be short? Would I be long? I don't know. You can make a case for both. I think that a lot of traders, I don't know. That's a real tough one. If it's a real tough one, it means the probability is close to 50-50. If I was long, I'd put a stop down here, probably down here. If I was short, maybe a stop up here. And I really think, I don't think we're going to get a bull trend. But what I do think is 50-50, maybe we get a second leg up. So, if you're short, it's hard to stay short here. And if you do, maybe you get stopped out and you have to sell again. Then we get a third consecutive bear bar. So we're probably going lower, probably going to a new low of the day. And, is it always in short? Maybe. But the problem with always in on a trading range day is that it's usually not clear. Here it's very clear it's always in. And what that means is you just buy. You buy for any reason. Buy this close. Stop down here or down here or down here. Buy a point lower, 2 points lower, 5 points lower. Buy above a bar. Buy this close. Put your stop way down here. Or, that's not a great buy, but you could buy and buy more lower. Or you could say, gee, this is strong. I want to buy a 10% pullback of this range. So, hey, I want to try and buy price at 90. I'm going to set a limit order to buy 86. And, you'd have been barely filled. So, either way, a lot of traders, when they just start seeing bear bars, they just start buying because they know the pullback is going to be limited and we're probably going to go sideways worst case. Here, totally different. So, bears are selling, but they're aware that the sell-off may be limited. So, just as we kind of got a 4-bar micro channel here, we got a 1, 2, 3, 4, 4-bar bear micro channel here. These bear bars are not exceptional. It erases this, but it's not anything like this. So, big bear bar, broke below the bottom of this channel, turned up, broke below the lows of the day. It looks like bulls are probably going to make money that bought this low. They certainly made money buying this low. This does not look like a strong bear trend. This looks like a leg in the trading range. But it's a micro channel. And we may just go sideways. We may have to break a little below. So a lot of traders will start buying and scaling and lower. And they see this whole thing as a trading range. They see this bull channel, bear breakout, 2 legs down, forming a double bottom. And probably going to test back to the middle 4,400, an obvious target. It's fairly close to 50%. It's not exact. So bull bar, but micro channel. So it's hard to buy. If you buy, do you put your stop down here? You can. I think it's better that more traders would buy and probably use a wider stop. And they're probably going to scalp. So went to the moving average, found sellers. And why is that? Well, it's a micro channel. And you can call it a 5-bar micro channel, maybe 6. And that's why. So we're testing this close. It's a micro channel. Again, it was reasonable. We would test the close. And you're going to probably find disappointed traders. We also, here's the low of the day. Here's the low, we tested the low of the day. Tested the low of the day here. We broke below the low of the day and failed. We tested the low here on this bar. This bear bar, we broke below the low of the day and failed. I know this is technically the low of the day. It's a support level. So what I'm getting at is maybe you want to say that. So maybe this is more important. This is the bottom of the channel. The problem with the trading range, and really with any support or resistance, whether that's a bull trend, trading range, a channel. The reason why trends are fairly easy, or breakouts are easier, is because the trend line is just straight up. If I was to take 1045 on a 1 minute chart, just because I want to do this, this is 1045. It's a channel. I mean, it's really a micro channel, and while it's not that simple to draw it. It is basically a micro channel. I could draw the channel like this. So here's a channel and broke above the channel. Odds are we're going to test the bottom of the channel. We tried, but we just kept going up. And you can see we quickly tested the top of this trend line. My point with that is go back here. The point I'm making is that when you're in a channel, whether that is a trading range, a sloped channel, a trading range and a channel is really the same thing. The reason why Al says you trade a broad channel and you trade a trading range that's broad the same way is because it's the same opposing forces. If you take a trading range, if you look at Al's course, it's a flat channel. It's a channel with two lines. And a channel is anything that can be contained within two lines. And I would make the argument that the market's always in a channel. It's just that breakouts are the channel's so vertical that it's hard to call it a channel. But by definition, it's a channel. So where I'm getting at is when the range is flatter, most support and resistance fails. And what you don't know when the range is really flat is this the low, or is this going to be the low, or is this going to be the low? And just imagine this for a minute. Imagine you buy a limit order at this close, this low. Not ideal, but let's say you did. So you bought it, and a lot of people, they'd buy it, they'd scale in, and they would just scalp out on the next bar. I get that. But let's say you bought the close, and for whatever reason, you'd made money there, but for whatever reason, you bought it right here on this bar, this bear bar over here, and went lower, and it went all the way down here, and even below this low. If you scaled in, went back to it. So trading ranges always, they would go below support, they go above it, they retest it, they fall below it, they go back to it, and I'll explain more of that down the road, but I think you have to be really comfortable with understanding that a channel. And make a comment if I'm kind of being confusing here. But a channel and a trading range are really the exact same thing. There is no difference in support or resistance. It's all the same. It's a price level. And we think of support or resistance as a line, but really it's a price. There's a price level here that just keeps going up and up and up and up and up, which makes it a line. And again, I'll explain more of that later. That's a very important concept. So it's an okay buy. Probably need a wide stop. And low one short, but probably trading range price action. Tried to break below the lows and failed. Do you buy here? You can. It's all limit order market though. So stop entries are going to look bad. They're never as good as what you want. But if you buy above it, you maybe put your stop down here. But it's not a great buy. It's a 4-bar bear micro channel. And generally, in a trading range, you have stop entries that look low probability that really are not as low probability as you think. So 40% may be closer to 50-50. And 60% may be closer to 55%. So there you go. So big bull bar, but it could be a channel. We have a low here, we have lows here. So we have a high, lower high, broke above this high, turned down, broke above here. But what do you notice? Bull bar, lower high. We could get another bear bar, but we probably won't. Probably just going to go sideways, may test all the way up here. And look what happened. We got a bear bar closing on its low. But isn't this bull bar strong enough to, isn't this bull bar stronger than this bear bar? Could be. But don't be surprised if this is a double top and some sort of second entry short, maybe here, low one, low two, or a double top with this, and we get a bear breakout. That could happen. And bulls bought this close just like they did up here. They bought at the moving average, disappointed, and used this bar to get out break even. They bought this bar, disappointed, used this bar to get out break even at their entry. And boom, bear breakout. That is what I'm talking about with channels. And you have to be comfortable with understanding that any one of these, and I'm still trying to think of the way to, it's easy for me to think about it. I've had a lot of time to think about this concept, and I got this concept from Al. It's in his video course, so I certainly didn't make it up. I just had a lot of time to think through it, and it's tricky to put into words, but there's a reason why a trading range is always the start of a trend, and in the videos, Al says that a channel, typically you can look back in a trading range, and when you see the breakout, you can look back and say, oh, well, it's obvious that, where's a place? This was it's a great example, but let's just say this is a bear trend. Well, it's obvious this was the start of it because we got a high, lower high, bear breakout. And that's because you can draw lines. You can draw lower highs. But again, I don't want to get too caught up in that. So big bear bar, but tail breaking below the low of the day. Where is one breakout bar that is significantly stronger than the rest? Where's the follow through? Where's the breakout here and then the follow through? We don't have that. So bear bar broke below this low. Well, as far as I'm concerned, that's great. Show me a follow through bar. Show me a strong bear bar closing down here, and then I'd be more interested in selling down here. Then you get this bar, and then you get this bar. So you have a wedge. 1, 2, 3. 1, 2, 3. Failed breakout of these lows, reversing up. And this was also a reasonable buy. It's 3 pushes down. 1, 2, 3. When you get this, and it triggers very often, a lot of traders that didn't scalp out here will buy more again below another bull bar. So I think the odds are, we're going above this bar, and a lot of traders just bought down here. And it didn't trigger. So if you're short, maybe you put your stop to get out 1 tick above the bar. Probably always in bears would get out above the bar. Didn't trigger. So is this going to be the start of a bear breakout? It might be, but why did we close at the low of this bar, not below it? So the low is 86. This closes 86. If the bears were stronger, we would have closed down here, and we're getting a tail. So does this look like some sort of strong breakout? Or is this, sorry about that, it's a leg in a trading range. 3 pushes, 1, 2, 3. And it doesn't look like, it's hard to, trading ranges never have an easy place to buy. So a lot of traders, you end up using a wide stop for this reason. So they know the market's going to reverse. They just start buying and buying more in pieces. Buying here, wide stop. Buying above a bull bar, wide stop. And this happens. So now we have a high, lower high, breaking above, getting a lower high. This is probably strong enough that we'll get a higher low on any sell-off in some sort of major trend reversal. Head and shoulders bottom, left shoulder, head, right shoulder. But what we don't know is how far down do we have to go. I don't think this is the start of a move. Big bear bar. So are we going to find buyers? Probably. Look how many bull bars. 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive bull bars. A lot of traders will buy and buy more lower, betting that this is the low of the day. Some will buy 50%, which is basically right there. Doji, so momentum's dying down. Bull bar closing on its high, sideways, big bull bar, bad follow through, another bull bar. So now, what do we have? We have a wedge. We still have not gone above a major higher low though. Here's a low. So here's a higher, lower high, here's a lower high. We haven't gone above this lower high. Therefore, you could argue we're still in some sort of broad channel. I do think, though, the reality is it's trading range. And then there's our breakout. So the bulls tried to get a wedge. They couldn't. Bulls got the breakout, 2 legs up, testing these closes, testing back to the open of the day. We may test all the way up here. So we have a lower high here. Bulls broke above it. Bears will sell, scale in. So we're probably going to fall below this lower high. And we did. So again, trading range price action. We're going to fall below this lower higher low, probably reverse up. We fell back below this higher, this breakout point right here. And here's the pullback. So that's pretty much it with today. I mean, as far as its trading range, we break above bars, we fail. Big bear bar, it's going to sell off and go to the low of the day? No, it's not. It's basically a sell vacuum, test of the open of the day. So that's another thing. It's important when you see this day to understand that this is the day you have. You don't have this. You don't have this day. So when you see this big bear bar, don't go, oh my gosh, I've got to sell. The real mindset you should have is, why is there's a big tail, so that's disappointing. Bad signal bar. Why is this forcing me to buy so low in what's probably a channel? And, another point, why haven't we had any big bull bars for follow through? Or why haven't we had many bear bars for follow through? Sure, we got this, but when we really got to the lows of the day and actually broke below major support, we quickly failed. So why this? And then look what happened here. We finally break below a higher low and just get this an aggressive bulls buy. Why aren't we getting this bar and then another big bear bar? Well, that's because traders, this is a trading range, and it just starts to oscillate around the moving average. So, or the open of the day, excuse me. So here's the open. If I can do this right. I don't like yellow, you can never see it. So here's the open, back to it, probably going to go above it. And again, getting bear bars, so we might get the bear breakout, but again, probably not. And remember, let me just draw this back. Good point here. Here's the open of the day, this red line. Well, this green line. We're far below it. And there's 2:15 in the afternoon. Still plenty of time. Back to the open of the day. Happens all the time. And at this point, it's 14:55. So what are we doing right here? The market's deciding. It is a trading range day. And if you think about it, if we rally all the way up to here, it's a trend day for the bulls. If we sell off all the way down to here, it's a bear trend day. So you have to be open to the fact that we may get a big sell-off or a big rally at the end of the day to change the daily chart. So big bear bar, bad follow through, and the bears couldn't do it. But with this sell-off, there was the day, an inside day. So I hope this video helps.